imagine you've saved $1,000 in your bank account. A year later, you go back to the bank and find out that you still have exactly $1,000. Great, right? Well, not so fast. What if I told you that even though your balance hasn't changed, you've actually lost money? Yes, that's right. It's not some sort of magic trick or scam. It's a very real economic phenomenon that affects us all. But what is it? That's what we're diving into today. Today, we're talking about a critical concept that affects your life more than you might realize. We're talking about inflation. Inflation is like an economic chameleon, constantly changing and impacting the value of your money. Have you ever noticed that the same amount of money buys fewer goods and services as time passes? That's inflation in action, reducing your purchasing power, and that's why the $1,000 you saved may actually be worth less in a year's time. Understanding inflation isn't just vital for economists or policymakers. It's critical for everyone because it influences our personal finances, like how much we save, how we plan for retirement, or even how we negotiate our salaries. At a national level, controlling inflation is a balancing act that can make or break economies. Central banks use their monetary policy tools, like interest rates, to keep inflation at just the right level, because too much or too little can be equally harmful. But don't worry, by the end of this video, you'll have a clear understanding of what inflation is, why it happens, and how it impacts your life. So stick around as we unveil the mysteries of inflation and help you become a better navigator of your financial journey. Let's get started. What is economics? Before we dive into inflation, let's take a step back and lay the groundwork by understanding the broad field of economics. What exactly is economics? Well, if we put it simply, it's a social science that studies how individuals, groups, and nations manage and use resources. It's all about choices, what to produce, how to produce, and for whom to produce. But, like any other complex field of study, economics has multiple branches, each focusing on different aspects of these choices. The two main branches we're going to focus on today are macroeconomics and microeconomics. As the name suggests, micro looks at the smaller picture, and macro looks at the bigger picture. Microeconomics is the study of individual economic units. It's concerned with the choices and behaviors of individual households, firms, industries, and markets. How does a single business decide how much of a product to produce? How do consumers decide what and how much to buy? These are the types of questions microeconomics tries to answer. On the other hand, macroeconomics takes a broad view of the economy. It looks at aggregate indicators like GDP, unemployment rates, and, of course, inflation to understand the functioning of the economy as a whole. Macroeconomics tries to answer questions like, why do we have economic growth or recessions? What causes unemployment rates to rise or fall? Now, where does inflation fit into all of this? Well, inflation is a macroeconomic concept because it deals with changes in the overall level of prices in an economy. However, it's also relevant to microeconomics. It impacts the purchasing power of consumers and influences business decisions on pricing and investments. So, in a way, inflation is a bridge that connects the micro and macro aspects of our economy. It's this unique relevance that makes understanding inflation so important. So, let's dig deeper and find out what inflation is all about. Let's tackle the big question, what exactly is inflation? At its core, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Simply put, when inflation is on the rise, each unit of currency buys fewer goods and services than it did before. Inflation as a concept isn't new. In fact, the term inflation originated in the mid-19th century from the Latin word inflare meaning to blow in. But it wasn't until the 20th century that it started to be widely used in economic contexts. Before then, the term was used to refer to the increase in the amount of money in circulation, which was believed to be the primary cause of a rise in prices. However, as economies and our understanding of them evolved, economists started to see that there's more to inflation than just money supply. Inflation has been a part of human history for a long time, though it became a more common economic phenomenon with the advent of national economies. We've seen it across different eras and civilizations, from the Roman Empire to present-day economies. Understanding inflation and how to manage it has become a fundamental part of economic planning and policy. Now you might wonder, how is inflation measured? Well, it's generally gauged by the inflation rate, which is the percentage change in the price level from one period to the next. This is typically calculated using a consumer price index, CPII, or a wholesale price index, WPII. The CPI represents the cost of a standard basket of goods and services, commonly used by a typical consumer, tracking the changes in prices over time. When the average price of this basket increases, we say that there's inflation. So, in essence, inflation is the rising cost of your morning coffee, your monthly rent, or the groceries you buy each week. And as we'll soon discuss, it plays a much larger role in your life and the economy than you might think. And there you have it, folks. We've navigated the waters of inflation together, unpacking its definition, its history, its measurement, and its impacts on both micro and macroeconomic levels. As we close, I encourage each of you to reflect on how inflation impacts your own personal economy. Consider your savings, your purchasing decisions, and how the ghost of inflation might be affecting your financial planning. Knowledge, after all, is power, and understanding inflation gives you an essential tool to better navigate your financial journey. Thank you so much for joining me today in this economic exploration. If you found this video helpful, please remember to give it a thumbs up and share it with friends and family who might also benefit from understanding more about inflation. If you haven't yet, please hit that subscribe button and join us for more videos where we make sense of economic concepts that impact our daily lives. Don't forget, if you have questions or ideas for future videos, we would love to hear them. Please leave them in the comments section below. And remember, the economy might seem complex, but together we can make it easier to understand. Thank you again for tuning in, and we'll see you in the next video.